All right, there we go. So now we're live. We're live and ready to go. Okay, good morning, everybody. So today we're going to be breaking down exactly what it is that we're looking for here in the markets. We're going to recap on what we've seen happen yesterday and where the markets are currently in this current structure here. Now, if we're taking a look at this market structure here, starting with the NASDAQ, and what we do is we go through our step-by-step checklist that we go through each and every day. Now, this checklist is what we have developed, the Ace Trader method. This is what has allowed me to scale to over $1 million in funding and take over $50,000 in payouts just utilizing this specific system, right? Just this specific system. So the first thing that we want to do is we want to make sure that we're trading our 9:30 a.m. to 10:30 a.m. Eastern Standard Time. That's typically when we see the most consistent volume on our assets, and the assets that we trade are gold, the Dow Jones US 30, the NASDAQ, and the S&P 500. Those are the four assets that I typically trade, and I want to trade into this session. Now, what we need to do is check my FX book for any news events for this session. We know that we don't have any news for today. This typically adds volume to our market structure and to our price action. We're going to go ahead and check that off. And then the first thing that we want to do is identify the 4-hour direction. Good morning, Island Boy. Good morning. Good morning. Good morning. So then let's go ahead and head over to our chart. We're looking at the M&Q here on the 4-hour time frame and taking a look at this market structure here, chat. What is this market wave that we're currently in? Are we in a bullish wave? Or are we in a technical bearish wave now? Is this technical bullish or is it technical bearish now? Talk to me. Talk to me. Because what we've seen happen is we had this high get created. We had a low, a higher high, relatively higher low, a higher high, then price came back down to break through this key area of interest here, right? It broke through that key area of interest on the 4-hour time frame with this move that we've seen yesterday. So what do we got going on? So let's see. Island Boy says bullish. Interstate Nas says bullish. It's Anika says bearish. Ebrew Trade says bearish. This is a technical bearish market structure. Give me 1 second. Let me send this out to the team so that everybody else can join, and then we can go ahead and we'll continue. If you spelling that wrong, oh, there we go. Okay, there we go. So yeah, we're in a bearish market structure now, right? Price has broken through this key 4-hour area of interest low, which was at that retest level that we talked about yesterday, that 30,800, right? That 30,080 level, is where we wanted to see the market actually hold, right? We wanted to see if the market could hold below this level, and we did not get that hold. Price has broken back inside of that larger time frame range that we have been stuck in for quite some time, and it pushed pretty aggressively. So if we're taking a look at what we're looking at currently, we're in a bearish market structure here on our 4-hour time frame. The next step that we want to do after we check that off is we want to identify our direction on the 15-minute time frame. So that's what we're going to do here. So if we're taking a look at the 15-minute time frame and the 15-minute waves that we're currently in, you can see once we broke through this, we got that very clean volume to fill the price action. First area of resistance there, that was very, very clean. So what is our current direction on our 15-minute time frame, chat? You have to DM the word join. You got to DM the word join. And I actually got to get it reset in order for it to the managing chat to send it out. So I'll send that out following the live session here. So in terms of this, yeah, we're in a bearish market structure, chat. We're in a bearish market structure. Price is creating lower lows and lower highs within this 15-minute bear market here. Now, in terms of this here, what we're going to do is we're going to play the game, our cook or be cooked, where we identify our key area of interest high and our key area of interest low within this bearish market structure, because this is important because it allows us to identify, okay, are we bullish or bearish? Where's our target? And then where would the market actually shift from being bullish or bearish to being the opposite, right? So in terms of this here, chat, talk to me real quick. We have one here. Where is our key area of interest high? That is the question. Where is our key area of interest high? One here, two here, three here. Wait for it. 3 here or 4 here. 1, 2, 3, or 4, chat. Talk to me. What do we have in terms of our key area of interest high? One, two, three, or four. If you guys are just joining us up, we're breaking down what it is that we're looking for here today, identifying what our key area of interest high is. Is it 1, 2, 3, or 4? Let's just zoom this in so that you guys can see this a little bit clearer here. So Island Boy says 1, Anika says 2, Carlos says 3, Desau says 2, above 50%. Talk to me. Where is the key area of interest high? If I draw it out like this, does this help? We create a low, create a high, lower low, lower high, lower low, lower high, lower low. That's where we're at currently. Potentially lower high, potentially lower high. So 20ND says 2. Desau says 2. Carlos says 3. Rob says 3. What is our key area of interest high? Well, let's talk about it, chat. If you guys said 1, you guys are absolutely cooked. This is not our key area of interest high, chat. That's not our key area of interest high. Remember, our key area of interest high is the highest point that started the move for the break of our previous low. So if you said 2, you guys are also cooked. This is not our key area of interest high, right? It's just not, chat. We need to see the key area of interest high. Again, it's the highest point that started the move for the break of our previous low. And if we are looking at this here, our key area of interest high is, wait for it, is not 4. It is in fact 3. So W's in the chat if you guys said 3. 3 is our key area of interest high here today. This is the area that, if broken, would now mean that the market structure is flipping from being bearish to now being technical bullish. You can see the reaction that we're getting pre-market off of this level. Price has not broken through that level there. Now, in terms of this market structure here, right, this being our key area of interest high, that's where we would actually see the market structure shift. Where is our key area of interest low? I said 1, but got correction. No worries, no worries. Carlos says, hey, I got it. W's, Carlos, W's. Where is our key area of interest low? Would that be 1 here? Would that be 2 here? Or would that be 3? Hold on, wait for it. Woo. 3 here. And 4 here. You guys are absolutely liking the stream. I absolutely appreciate each and every one of you. If we can get 10K likes, I would absolutely appreciate you guys here. Is our key area of interest high 1, 2, or 3, chat? If you guys are just joining, we are playing our game Cook or Be Cooked, where we're identifying where the key high and the key low is in this current market structure, because that is where we will look for price to potentially target here today. So is it 1, 2, 3, or 4? So let's see. JJ says 4. Bernard says 4. Ebru Trade says 4. Josiah says 4. Bamalia says 4. Good morning. Good morning. Desau says it be 4. My G. Island Boy says 4. Right. I appreciate you guys who are sharing up the live here. My Time says 4. Dr. T says 4. Mr. J says 4. Everybody says 4, and if you said 4, you would be absolutely correct. W's in the chat for all my 4s. You guys are absolutely correct. This is our key area of interest low here, chat. So this is where we would anticipate the market to target here today. Now, I am more inclined to sell positions here today, but let's go ahead and let's talk about this market structure and set some of our targets in terms of our areas of interest. Now, why this is important for those of you who don't know, being able to identify your key area of interest high and your key area of interest low is where we would initially see the first potential shift. So for instance, yesterday, what did we see happen in the markets? The markets were creating higher highs and higher lows pre-market, and then we got into market session, or pre-market. Actually, we came down here, we created a lower low in a corrective structure, and a corrective wave is what we treated it as. Price retested, and then we got a steeper move to the downside. Price then pushed up, invalidated our highs. This was a pretty choppy market structure, but then price then finally started to create lower lows and lower highs. We came back down into this resistance, finally broke through the resistance, and you can see the impulsive move. Once getting through this resistance, you got very clean price action all the way back down to this level here. You can see that's actually where we started to see some resistance form, and then we retested that level and saw a steeper move down. Right, so the market structure is technical, 4-hour bearish, 15-minute bearish. If we're 4-hour bearish and 15-minute bearish, what type of structure is this? Is this a continuation structure, or is this a corrective structure? Jay says amazing price action. Yeah, we got some clean volume here in the markets. We got some clean volume for a possible move here today. So Island Boy says a continuation, and you would absolutely be right. Right? Since Magazine says continuation, you guys are absolutely correct here, right? This is a continuation structure. The market on the 4-hour and the 15-minute are in alignment, meaning that it is a continuation structure here. So in terms of this, what are we looking for here today on the NASDAQ? Well, we want to see how price is, for one, going to react off of our key area of interest. Where we could see price target, where was our, let me see where we at. Previous day high, very, very high up here. So our current day high, excuse me, previous day high is very, very high, but current day high was very high as well. So what we can see is potentially a target back into current day lows to break our current day lows here, especially if we reject off of our key area of interest high. The 1-hour time frame is showing that it looks like it might want to do that. If we break back above this resistance here, we come back to retest, then we'll target into the highs upwards of this 29, nearing that 29,900 resistance here. 29,900 resistance. That's where we would look for price to potentially target if this does want to full on pull out a reversal. But as of right now, we are bear bias, so we want to see price come back down into this 29,688 level. Below 29,688, we could possibly see a retest of that 29,688 for price to target. We got to zoom out here. Where is our resistance at? Let's take a look on our 4-hour time frame and see if we can see any key area of resistance. I mean, next resistance level to me appears to be, this is kind of a little bit more complex, appears to be down here at this like 29,621 is where we got a 4-hour rejection off of. You can see kind of this resistance level if we mark it out there. Right there. So we dial it down to the 15-minute. This is where we could anticipate price to actually give us a little bit of a rejection off of, really like that 29,600. That's where we could see price to go to. Below 29,600, we'll have to wait and see, because we do have moves down to that 29,537. That's where we would see our next area of resistance if we do break through. And then below there, I mean, price has a bunch of different levels that we could actually reject off of. But we're going to see how price is going to go. As of right now, look at how it's reacting off of that key area of interest high. This is telling us that price is still in fact bearish in this market structure, right? Sinju or Singed, if you want to join our VIP, you can DM me the word join and I'll send you the link so that you guys can join. It says show me step by step. Again, I just joined. Yeah, no worries. So our 4-hour time frame is bearish. Our 15-minute time frame is bearish, as indicated by the lower lows and lower highs. And since we are in this bearish wave where price created this low, we created a lower high, we created a lower low, lower high, lower low. Price is rejecting off of that key area of interest high. It's likely that we target this area of interest right here. What we're doing is we're trying to train up the best indicator. How many of you know what the best indicator is? How many of you know what the best indicator is? For my veterans, you guys should know what the best indicator is. The EYES, chat. Yes, the EYES. That is the best indicator, and that is your eyes. Don't be going on the chart looking up the EYES, right? It's your eyes. That's what we're training up every time there's somebody who goes and looks up the EYES. But yeah, so we're trying to train up your eyes so that you can identify, okay, where's your key area of interest high? Where's your key area of interest low? And where is price more likely to go and more likely to target? This is a game of probabilities. So we want to stack all of the confluences. You got to think of yourself as a market detective. You're pulling out your magnifying glass and you're trying to figure out all the different clues that the market is telling you so that you can paint the picture on how to actually execute, right? And in terms of this, right, our 4-hour time frame is bearish. Our 15-minute time frame is bearish. Which one of these key areas of interest is more likely to get broken? Is it more likely that we break through the low, chat, or is it more likely that we break through the high? Which one is more likely to get broken? I appreciate the follow, Stan B. I appreciate the follow, Mom U45. Right? Appreciate you guys following up. We're creeping up on 7,000 followers. I think we hit 6.3K yesterday. We're creeping up on the 7K, right? You guys have been absolutely snapping here. Light in Yami says low. Josiah says low. Tina says low. Xavier says low. My time says low. Yes, it's more likely that we break through the low than it would be for us to break through the high, simply because all of our clues that the market is telling us is pointing to the downside. So that means it would be harder, and how I like to think of it, it's harder for the market to get back up to break through a key area of interest high, because that would have to do what? Shift the market direction, right? It's more likely that we just flow in the direction of the market, which has been going to the downside here, right? So it's more likely that we break through our low than it would be for us to break through our high, and that's how we utilize our targets in the markets. Drop a yes in the chat if that's making sense. Drop a yes in the chat if that's making sense. Adrian says, can you show the trade? Yeah, yesterday we actually took a small loser yesterday. It was the first loser of last week. We didn't take any losers. Yesterday we wanted to see this possible continuation. I'll show you my trade here real quick before we break down our next asset. I don't have a ton of time to be on with you guys here as we came on late. Had a couple of technical difficulties. All right, so Adrian, what we've seen happen 9:30 open, we had this bearish move to the downside that rejected off of this high. I was waiting and told the team that I want to see price actually break through this low here, right? Wanted to see it actually close through this low instead of taking this first initial trade on this 5-minute candle here. We wanted to close through this low just because we had resistance here. If you take a look at this resistance to our left hand side, we had this resistance right here. So I didn't want to trade this first initial 9:30 candle, and we wanted to see if price could actually invalidate or continue to go to the downside. So what I did is I dialed down to my 1-minute time frame, Adrian. I dialed down to my 1-minute time frame here. And what we've seen is price was creating still on this lower time frame after that 5-minute candle closed. That 5-minute candle closed here. This is the one that closed below our area of interest, right? We ended up pushing back up. Price held this 1-minute high. So we created a low, lower high, lower low. We held this 1-minute high here. And on this 1-minute candle confirmation, I went ahead and took shorts off of this level here, anticipating this continued break to the downside for price to gravitate and fill this gap here. There was a gap that we had right here. So my target was to right there. Oh, wait, this low. This is where I wanted to see price actually gravitate to. We ended up taking this at a reduced risk, so a 0.5% risk, simply because we didn't have a ton of volume, and this was a corrective structure trade. So a couple of things were stacking that this was a lower probability setup. So we went in at a 0.5% risk. We did see a little bit of profits here. Price failed to break back below this low, and once we seen this price action throughout the rest of the day, price had pushed up and invalidated this high here, and then came back down to invalidate these lows. I went ahead and called it a day, and I was just like, you know what, we'll wait. Price action did start to clear up. We got back below this low here, this resistance low, and that was like at 1 p.m. and then we finally got that move to the downside that I was looking for. But by that time I was off of the charts. So we did take a small loser yesterday. There's no biggie on that one. We're gonna look to capitalize here today. I spiraled out of control yesterday, revenge trading. And it's crazy that you say that, because I literally told the team, this is the markets where traders will blow their account. That type of price action where the market just doesn't have a decision on where it wants to go. It's going up, it's going down, it's going up. That is where accounts get blown. And that's why we talked about it in our VIP, right? About one, we wanted to reduce risk on our trade because we knew the choppy market structure. But two, we wanted to just end it there because, for one, 70% of my losses I know happen in a choppy market structure, which is an invalidation of a high and invalidation of a low by my strategy, right? So if we have no set direction, there's a time when to be aggressive and a time when to be defensive. And yesterday was definitely a day, especially with no fundamental news to really drive the markets. Yesterday was a day where we wanted to be more defensive. Not only was this a corrective structured trade, we had lower, slower volume, and we had no fundamental data that can actually drive the markets. And that's exactly why we risked lower on that trade, still allowing ourselves to potentially capitalize on the move, but didn't want to over leverage and over risk on a day that is less probable, right? Revenge trading in the big 26. Yeah, hey, look, it happens to everybody, right? It happens to everybody. I've been there. I used to revenge trade too, until I understood, market cycles, right? What wave are we in? Are we in an aggressive wave, or are we in a lower, slower wave? If we're in a lower, slower wave, you just gotta adjust accordingly, especially your risk management. More contracts, but still in the game. Big institutions are a vacation, slower market. Yeah, we do anticipate a slower market this week simply because we don't have the fundamentals. We do have the FOMC minutes that's going to be released tomorrow at 2 p.m. Eastern Standard Time, which could add a little bit of volume to our market. But this is going to be strictly price action based, right? So the trades that we're going to be taking this week are going to be strictly price action based, anticipating, a continuation just off of the type of price action that we have in the markets. I know I didn't say price action like 7 times there. So what am I looking for here today? I want to see if we can get this continuation to the downside to break through this low, or we get a lower minor shift here where price breaks through our key area of interest high, and then we'll target back up to that 29,900. Below these lows here, we'll look for a correction and a continuation down to that 29,600 there. I am still overall bull bias, but the way that this current weekly is pushing, I don't know that we're going to get back above this key area of interest high this week, especially if we have no data that can really drive the markets. We already swung the previous week highs, and so we may come down and take out this previous week lows, but we shall see. I do believe that we'll see some type of rejection off of these previous week lows as we creep down into this 29,600. If we do break previous week lows, we have clean price action back down into the 29, like near the 300s, like 29,300s. So definitely some moves that we can see, right? I'm putting a lockout on my account, and that sometimes could be the best bet, right? That could sometimes be the best bet. Mental is 70% of the work, 100%, right? 100%. So in terms of this, let's take a look at another asset. Let's take a look at gold. Gold is an asset that we've been watching and monitoring here. I got about another unfortunately, I only got about another 5 or so minutes to be on with you guys. But if you guys do want to join our VIP, you guys can join the VIP. This is where I'm going to be sending out my trades. We trade Monday, Wednesday, and Friday live. And then I send out my trades on Tuesday and Thursdays when we are not live. So you guys will still know exactly what setups that I'm looking for. And I think we need to implement some kind of back testing sessions as well. But I'll talk with the VIPers and see if they want to do that. Now, in terms of gold here, what are we in terms of the gold markets here? Are we in a bullish market, or are we in a bearish market if we're looking at gold here? If we're looking at the gold. I thought mental was 90%. He said not fully. You still need fundamentals, of course. Yeah, literally, you need mental. Like, it's really, you should understand how the fundamentals work, because it's just an added tool in your toolbox, right? Technical analysis is typically what drives the markets, but you do need to understand fundamental analysis. I had a video drop yesterday on YouTube which explains the fundamentals that we seen happen last week, and I'll have a new one that kind of explains, what you expect based off of how the news swings, right? How the news swings. So, how would you help me trade? Yeah, so we could talk about it. We'll go through. You'll also be able to trade live with me. You'll be able to get my trading journal along with the Ace Trader blueprint, or the checklist that'll walk you through exactly how I enter my trades. The biggest thing is understanding the mentality, when to be aggressive, when to not be aggressive, and specifically if you trade in funded accounts, what your specific plan should be on, depending on what type of account it is. What is your drawdown on the account? Is it intraday, end of day? How much do you have to risk? And what is the payout structure? Because that determines exactly how much you should be risking on your those funding challenges, both the trial and the actual funded accounts. It completely varies depending on what firm you're trading, what challenge specifically you're trading, and what your bank is in order to actually acquire challenge accounts, right? So it can get very, very specific. Or even if you're trading a personal account, how much you have in your personal account, what assets to trade at what time, how to risk there. It just varies. What's your YouTube? YouTube is the same as the TikTok for the Culture FX. So in terms of gold, let's break down real quick what gold is doing before I have to get up out of here. 4 hour time frame, we were pretty bullish here, right? Price was creating lower lows and lower highs within this bearish market structure. It pushed all the way back up. We've seen Friday, really Monday, we got this move to the upside, and then Asian session yesterday, we started to see this move to the downside here. Let's dial down to our 15-minute time frame, see if we can get a little bit of a better picture as to what our 15-minute is doing. I do not like the range that we're currently in on our 15-minute time frame here. You can see we've been struggling to break through this low, but yet still can't break through this high up here. We're in between that 4,460 level and 4,444. Nice solid number there. 4,444 is that resistance that we have been rejecting off of. Now, in terms of a technical analysis side, this is still bearish on our 15-minute. 15-minute came down to break through these key area of interest lows, invalidating those lows. Lower high got created, lower low. Lower high didn't break through this high, did not create a lower low, and we've just kind of ranged off here, but the overall pressure is still to the downside. So I would expect a possible break of this low here. If we can get below this low, you can see a steeper move back down to that 4,434. Goodness gracious, that was a tongue twister to get out, which is this resistance down here. Below this resistance, you can see price move back down to that 4,423, which is our previous 4-hour key low, right down in there, right? If we see this level hold at this 4,044 and you get a break back above 4,460, then you got clean price action upwards of this 4,477. So I would say that price could likely fill this wave back up to that 4,477. So it really just comes down to, are we going to have the volume here today to kind of drive this market? Overall market structure still bearish, so I would anticipate this break of this low and this continuation to the downside. But you help us with that, correct? Yeah, absolutely, absolutely. End of day eval again and again and again. Firemen's for me. Word. So the end of day is probably the best account. I definitely recommend end of days over intraday trailing. It's just intraday trailing can be a pain, but you know, to each his own. End of days typically are a little pricier, so it really just depends on, you know, what your plan is in terms of your execution. So for gold, I would be looking for a steeper move to the downside. The YM here, really quickly, let's go over the YM. The YM has been very, very bearish here. We actually got below that resistance low that we were at yesterday pre-market. Price then retested that level on the 4-hour time frame here and then made a steeper move to the downside. It is still in a technical bearish market structure. Now, this is the only one that was technical bearish prior to yesterday. We were just very, very bearish after price had took out these key lows here, broke through that. That was on Thursday of last week, and then we've just been kind of in this bearish market structure ever since. Very, very slow in terms of it. Or this was actually 2 weeks ago, excuse me, not last week, 2 weeks ago. Last week was very, very slow, but we are still trickling to the downside. So we do anticipate steeper moves down here. Nothing has really indicated anything otherwise except for this 15-minute shift that we've seen here. So price created this low. Excuse me, I know I'm going kind of fast. Created this low, lower high, lower low. We broke through this high here. You do want to see if this low is going to hold at this 53,400. 53,400 being a nice area to actually see a pivot off of. So if we do see price come in here and we get an aggressive bullish move to the upside here today, you can see a target back up to that 53, let's say 600. Nice solid hold number. We love our solid hold numbers. 53,600 resistance, and then upwards of this resistance here. This was our previous larger time frame resistance here, which is at that 53,652. That's if we see buys. If we break actually below this low and gravitate towards this 53,400 lows, you get back below 53,400 lows. I mean, you have very clean price action to the downside. Your next resistance target is going to be 53,300, right? That you can see price actually gravitate towards. How to know Sentinel taking off. I believe I could become profitable with a good teacher. YouTube is frozen. YouTube is frozen. I'm sorry for that there. I'm not sure why our YouTube is frozen. I apologize, Tavares. I'll make sure that we'll go ahead and just end that there. Oh, it's just freezing. Oh, I see. I see. Okay. Yeah. So, How do you know when good volume, like a set number or something? Okay, so volume depends on a couple of things. One is, do we have clean price action to our left-hand side? If we have clean price action to our left-hand side, for instance, you can see here below this resistance low, there's nothing here until you get to about right here at that 29,900. So if you break below that, you can expect some pretty clean price action, right? And expect some pretty good volume. Again, taking a look at our area of interest here that just got broken, we did say our key area of interest high was up here. We're more likely to break through our low here for the NASDAQ. We do have clean price action. So if you get below this low here, again, a little bit of a choppier market right here in this resistance. Is not as clean as that move that we seen yesterday, specifically during the Asian session. Absolutely beautiful sell during Asian session. We can still see some pretty clean volume. It just depends on how that 930 candle opens, and do we open with volume, especially in a particular direction. If we see invalidations of highs and lows, that to me already indicates a choppier market structure, a lower, slower volume. And then again, we have no fundamentals to really drive the market. So those are a couple of different things that can actually change if we're expecting to see high volume or lower volume. Stevie McDonald, appreciate the follow. Rochelle, appreciate the follow. I'm sorry if I said your name wrong there. Appreciate you guys following up. Let me see. Appreciate you guys following up there. W's. Okay, good to know. Look to the left and news. Yep, sounds good. Sounds good. What am I looking for? Yep, there we go. All right, so that's pretty much going to wrap up what it is that I'm looking for here today. We'll take a look at some of the other assets like the ES and oil. Oil is something that we're just bull bias on. Trump just posted this morning that they are looking to take the Strait of Hormuz, and seize control over it. And what they said specifically is he wants to hurt Iran financially, right? And so what Iran has been doing, a little quick tidbit, because I know I got to get up out of here. Iran has been trying to control the strait, and what they've been doing is they've been tariffing, or taxing, shall I say, the countries around the strait for oil, which has really helped their economy financially, right? And so what Trump is trying to do essentially is take control of the strait so that it essentially ruins Iran financially, and they don't have that control over it. And what does that mean? Well, it just means that the price of oil is likely to continue to go up as, they battle for control over the strait and who gets to come through, who doesn't get to go through the strait. And again, 20% of the world's oil goes through the Strait of Hormuz. So if we do not see the strait opened up, well, more oil can't get through and the price of oil is likely to go up. And we're expecting this to be pretty bull bias. I don't see any end in sight, and this can have a big indication of our next CPI. If this rises too high, then the price of energy will likely go up, which means that we'll see our CPI data, our inflation data, potentially go up as well, which means that rate hikes may come, right? These are different things that trickle on the fundamental side that really truly affect the markets and the direction of the markets going forward further, right? Hopefully this makes sense. The confidence and knowledge you hand out is priceless. I absolutely appreciate that. Michael says passes funded account yesterday. W's in the chat for Michael. Passing a funded account yesterday. W's in the chat. W's. The pair name for oil that you trade is CL or MCL. Yeah. CL. Terrell King, appreciate the follow. Tanisha? I'm so sorry if I butchered your name. I appreciate you following up. Appreciate you guys following up. Well, it has been a pleasure to be on with you guys here today. I'm going to be looking at trading the NASDAQ here. If you guys want to join our VIP, make sure you DM me the word join. I'll make sure to send that over to you guys. This is where we trade live with our community so that you can see how I'm executing in real time. If you didn't take anything from this live today, just know that I believe profitable trading is probable and likely for you, right? Trading has completely changed my life, and I know that it can do the same for you if you just stay locked in, you stay committed, and you allow yourself to have certain boundaries when it comes to your trading. You keep showing up here every day, you will learn how to trade, and I appreciate each and every one of you being on here. My name is Kyrien Idlebird. You guys have been a pleasure to be on. If you're not currently following, be sure to drop a follow. I don't want this to be the last time that you guys see me, and I'll catch you guys tomorrow for the next one. catch you guys tomorrow for the next one. So enjoy the rest of you guys' day.